The ECB is desperately attempting to get inflation up to its target as a massive downward pressure becomes its opposition. It has been shown that the effects of the trillions in stimulus has been absolutely ineffective and inadequate to make an actual difference. Prepare for the cities to burn in this economic collapse. You came here for the truth, so let me unveil that for you. Let's look at the ECB buying 1.74 billion euro in bonds. That's their plan in order to get things back to where they were. A failed policy from the US, a failed policy from Zimbabwe, and a failed policy from so many other countries, but let's give it a try with the ECB. Even though they said they would never do this, hey, why not? The ECB held interest rates at record lows and kept the door open to more stimulus, but gave few hints about its next move, disappointing the markets that had priced in a decisively dovish tone. So what exactly happened here? Well, it's just talking. It's just more of what the Fed calls forward guidance. We're going to talk to the markets, we're going to talk to everybody, and that is enough to make a difference. The ECB President Mario Draghi said the ECB will study policy options to ensure it can pursue its, and I agree with this, unprecedented money printing program, but did not hint at the anticipated extension of asset purchases. So basically, after March, they're not going to print anymore, so they say. But, of course they will, but they can't say that because then the market automatically prices that in. It expects it. Then by March, they could just continue on the program. Then what's next? They need to print even more money. Well, how much do they intend on buying? Well, I said it in the beginning, 1.74 trillion euro. I mean, you're talking about massive numbers here, and the effect of which has been nothing. It, according to Reuters here, it managed to prop up growth. It absolutely didn't. That's not true at all. But that's what they say. Growth of what? Growth of the purchases of bonds, sure, but not in the actual main street, not in the economy. It even shaved some of its forecasts on Thursday. Blah blah blah. Talks about some things I don't believe are substantial at all. Actually, this article here does get into a lot. So if you want to read one article regarding the ECB and this near term here, this is the one that you want to definitely read. Goes through a lot of points about this. I don't have time, of course, in this video, but what we're looking at from the ECB is basically, will they print or will they not print? And you got to look at what they say, and then you look at their actions, and you know that there's obviously some disconnection there, but it's a failed policy. It's not going to work, and the more they do this, the more dilution occurs. It's the same with the Fed. I just covered it. Okay, so the ECB makes the statement, and immediately stocks just tank. And that's what happens. You cannot say anything, even, he didn't even say he wouldn't suggest buying, or the ECB wouldn't want to buy after March. He just didn't say that they would, and that was enough to send the markets downward. And even Rosengren, which I'll talk about in a moment, his comments didn't even necessarily help in this case for these different things. You can see the Euro USD, the gold, and the S&P, and also the 30-year US. But what we see here is a trend that's declining based on the actions of the ECB, or not even actions, but the words of the ECB. And what that means to me is that the market is looking for any reason to decline, simultaneously looking for any reason to rise, but it's just so weak that every little bit of bad news sends it downward. Let's move here. As you see, Germany having no plans to reduce its export stimulus, according to their finance minister, saying the ECB has not changed its monetary policy, which has led to a weaker euro that boosts German exports. Okay, weaker euro, Germany wins. So in this case here, Germany's doing great. Of course, not how good they should be, but based on the fact, compared to others, you can definitely see that Germany has done a lot better than countries like Italy, Spain, Greece, Portugal, and others. He dismissed the suggestion that the ECB Mario Draghi said Germany should use fiscal room for maneuver to decrease its export surplus. And there's a lot of finger pointing that goes on, even within the eurozone. If not, it's always, coming across the oceans. There's a lot of finger pointing that happens. Even before the ECB decided its policies of unusual monetary policy, which also led to the euro exchange falling significantly, I said that we will increase German export surplus. All right, so check this out. If the surplus in the eurozone, let me grab this highlighter here. If the surplus in the eurozone as a whole rises by a total of 3.6%, one should not be surprised that the euro export surplus has also risen, if not by 3.6, but by 2%. Basically suggesting that, look, everything is going to come out of Germany should the euro be weak. That's just the way it is. And that's the failure of the eurozone itself. The EU is in fact a failure because you could not have one interest rate and one currency for all different countries. It doesn't work. I've said it a million times. Let's move on to this. As I mentioned just previously, we're looking at the Federal Reserve here, and it's not all just Janet Yellen. There are others who are high-level individuals. A lot of times they have the capacity to vote as well. Now that the ECB has held, that leaves the door open for the Fed to do something. Now, what the Fed is going to do, they're interested. Will they increase interest rates? That's what this is all coming down to. We don't see them pulling the trigger next week. It's going to be unlikely. They're just not going to do it. That's what some are saying. Others are saying they see that strength. But the likelihood of a Fed interest rate increase has risen to 27%. Look, they were wrong 100 times prior to December 2015. They really have no basis in judging whether they will or not. All right, let's move on to this. The theme of this week, at least, where the US dollar traders are concerned, is that September move from the Fed is all but impossible, while December is becoming more unlikely too. So they're saying that it's not even going to happen in 2016 at all. That would be very, very, let's just say, showing the signs of the weakness, the true weakness, because they can have a lot of talk. But when it comes to the actions, that means a lot more. Now, their actions are so minimal, as we saw back in 2015. However, it at least shows you something. If they're willing to increase it even 0.1%, that would at least show, look, we're trying to make some progress here, but they're not doing that. Once Mr. Rosengren's remarks are combined with yesterday's ECB meeting and hints for the Bank of Japan, it becomes worryingly clear that central banks might be stepping away from loose monetary policy. There will be no relaxation from these loose monetary policies until the globalists are ready to crash this economy entirely. You want a global economic collapse. We're talking about this. The financial reset. We're talking about this mega critical ultra alert that you've seen many times throughout YouTube. And what these individuals are talking about, I don't know, maybe it's different than what I'm talking about. What I'm saying is that we will have an intentional collapse. And the collapse will be a massive deflation, real deflation, where people are just pulling their money out, followed by central banks' reaction to that in a hyperinflation, and it will destroy everything. But just prior to that, when it's at the precipice, you have the world leaders coming together. The IMF, the EU comes together, the G20, the UN. All the big boys come in to save the day. And they decide that we need a new monetary system. That monetary system will be controlled by a supranational entity, whether it's the IMF using the SDR or whatever. And you will have their currency that they use, if they want to use something like an SDR, it'd be the currency, but they can use any scheme. And then we'll back our currencies, supposedly, even though it's fictional, but they will back our currencies. It will be no different to you and I, or the uninformed. They'll be using their own currency. However, there will be a lot of changes within the financial system. Supranational entity running things on a higher level like this is never a good thing. You have the internet being taken over. You have, supranational entities running everything. So it's all corporations and supranational entities. The governments are basically, ceding all this control to, things what I consider to be foreign. A company like Walmart, just naming a name, doesn't care about the US. It doesn't care where its head office is. It doesn't care about who buys its stuff. It's all about, corporate profits on one level and then control on another level. Let's stop with the ranting for a moment. Let's move on to this here. Pound skids below 133 after the ECB says Brexit uncertainties will dampen eurozone economic recovery. I just wanted to throw this in here just to show you how all of the finger pointing takes place. Okay, so it's going down. Just a second ago it was because it wasn't enough money printing, but now it's it's you. It's the Brexit. It's you over there, you traders, you're doing that. Oh, okay, pointing the finger. Okay, next day it's you over there in Australia. It's your problem. And then pointing over here. Okay, it's China there, and it's Canada. The next day it's Japan. They're going to use every excuse in the book, but you got to look through all the garbage, all the crap, and you have to realize what the truth is. And that's why you came here. So I would say if you found this video informative, please give me a thumbs up. Those thumbs up truly help me very much, so I do appreciate those. And last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon, where they have this look inside feature. It will allow you to flip through the pages of the book and see if you like it. Take care. One thing I wanted to mention, which I'm not sure if I ever have before, but my book here, if you've bought the paperback copy, there's actually a feature which I enabled. I've found it hidden somewhere, that if you want the Kindle version, I made it 99 cents. So if you own the paperback and you want to get the Kindle version, maybe for someone in your family or anything like this, you can do that. Maybe you want to give them the paper book and you take the Kindle version. I don't know how you want to work it out, but 99 cents. So definitely take advantage of that. If you have the Kindle, you can get the app for the iPad or iPhone. You can get it on there as well. So just wanted to let you know that's an option. Take care.